The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the October 24th magnificent Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do this, well, folks, it's to always remember that things happen for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go look at the circumstances of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I at just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. And more importantly, I'm here to serve you. So feel free to pick up that phone. Now is not too soon. 877-927 is the number to call in on. Of course, 727-445-1044. So let's go ahead and get this show started on magnificent and magical Monday. Of course, this is the Hotel California, sponsored by Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we have the Dow traded up 65 points. She's trading out 18,210. S&P is up 7.5, trading at 2149. NASDAQ Composite up 42 points, trading at nearly 5,300, even Steven. You've got the Russell 2000 up about 6 points, trading at 1223 and change. The DAX closed up 50, the FTSE down 34. Gold is off $4. Silver's up 9 pennies. Light sweet crude back 98 cents. Leading the charge here to the upside, amazing Amazon up $14, nearly 1.75%. Google's up $13, a little over about 1.75% there as well. You've got Merchants Bank shares up 30%, maybe an IPO, I don't know. BE Aerospace, not an IPO, 16%. Intuitive Surgical, brain salad surgery is what Stevie likes to call it. That's up 7 buckaroonies. You've got Peabody Energy up $7 as well. To the downside, Williams Clayton Energy off $7, about 9%. Syngenta off 6.5% or $5. Rockwell Collins down $5. Kimberly Clark down $4.50. And so how was your weekend? How was your weekend? I hope it was a great weekend out there. Things have cooled off a bit in Florida. That's a beautiful thing. October is a great month. November is a great month. January is a great month. February is a great month. A lot of great months down here in Florida. But what you want to know is, hey, you don't care about the weather. You don't care about the weekend. What is the market doing? Hey, the good news is we've got our next real data point. The bulls, by the way, they went out for lunch. You know, saw that they had a nice open this morning, but they went out for an early lunch. They came back early. How do we know they came back early? Well, if you and I just take a look at our 30-minute chart, and that's an important chart for us to take a look at, we do know that the most recent bottom that formed out here, and you're saying, hey, I don't care about the bottom, but we must look at the patterns associated with the last bottom. Back here on the trading day of October 21st, right? Price moving lower, doing less relative energy, form a nice little bull sash candle down there. Price moves higher. I did say higher into the time frame here of 10 o'clock this morning. What was it doing at 10 o'clock? Moving higher, doing so with less relative energy. And then the bears showed up. They showed up right there at 10:30, between 10 and 10:30, formed that little dark cloud, bearish engulfing style color out there, really just a bearish engulfing candle. And price moved lower until this show was getting ready to ding, 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 ding. So it did ding, and we had a little hammer show up there. Now, hammer candles by themselves, they do have meaning, but, you know, it's more important for these candles to form at a reversal pattern, at a pattern where you're going to see, you know, at a pattern, at the completion of a pattern. Doesn't have to be reversal. It could be the completion of a pattern. It could be an A to B equals CD, a lightning bolt pattern. Could be price movement lower or higher with less relative energy out there. Well, we see the last bottom. We now see the next top. Now, the cool thing about this hammer candle is that it does show that bulls are trying to hammer, the meaning is that the market's trying to hammer out a bottom here. So we have price trading below Stevie's oscillator unchanged line. That right now is priced at 2145.50. Yeah, 21. No, it can't be. Yeah, 21.45.50. We're trading about 21.43 as we speak right now. Here's the deal: the market will head lower if and when, only if and when, we see a move below this hammer candle. The question would be where, we can take a look at a couple different ranges. 21.36 would be the first one on my list, or the 21.36 area, I should say, would be the first one on my list. What happens if price moves above 21.45? Well, what will likely happen, and if it'll move back to its highs, probably take out those highs. I don't know if it does it by 1, 2, 10, how many ticks it does it by, but it will then, or it could then, get up to that seventh wave move to the upside, or could really just, well, let's take a look at the daily charts to the old just is and where would price head to. So you want to watch, depending what, doesn't matter which side of the trade you're on, you really want to watch the low that came in here at 1 o'clock, which is during that 1 o'clock session on a 30-minute chart, which is 21.40.50. 21.40.50 is your key number out here. Now, inside of the NQ, right, which has really been the strong dog out here, the NQ will also, or could also, give us a message here in the not too distant future. What do I mean by that? Well, in the case of the NQ30, which we're taking a look at on our screen right now, we can see the completion of a 1 to 1.618, A to B equals CD. That had a price target of 48.96. You know that we only use this as a projection tool, one that you can use as a reversal pattern, which, by the way, that reversal did come into the picture right here, small little bearish engulfing candle. That was also at the, well, no, that was not also at, that was at the 12 noon session out here. So it took a while before the bears were able to show up. Now, price here, and I'm going to go ahead and turn off the A to B equals CD pattern, right? Price here, oops, geez, why did that happen? I know, because I grabbed it in the wrong spot. Well, we can see, I did it again. There it goes again. Let's see if I can do this correctly here. Now, what we can see is at the same time that this high was forming at 11:30, 12 o'clock was a confirmation of at least that intraday high. You did get that Stevie Wonder pattern where it was singing in the key of G. However, price was moving along just fine. It was doing it with plenty of energy. So we don't have that topping pattern that is in play out here. I can see a potential, maybe not even anymore, but so I won't go into that. But what we can see that's not potential is price is not giving it up. What do I mean by not giving it up? It's not trading below that oscillator unchanged line out here, which is about 48.92. We're at 48.94 as we speak right now. So this could take out that G. And what does that say? That says it wants to continue powering forward, and therefore that hammer candle inside the ES would have a lot of meaning. So there is your battle of the bulls and the bears as we speak right now. It's going to be the ES mini, and it's going to be the NQ that you and I need to watch. Of course, the Dow is doing its thing as well. It also formed one of those price relative strength divergent tops out here. No hammer candle, so it's only going to be the ES and the NQ. We're going to be paying attention to today's high. If that gets taken out again, well, then that just says that the NQ will go ahead and lift all boats higher. Those boats being the USS ES Mini and the USS YM and probably the Russell 2000, which, by the way, on Friday, and based on today's action, has generated a beautiful, a Stevie Wonder singing in the key of G bottom. That's right, folks. A bottom could be in for the Russell 2000. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So we've identified at least two areas that you and I want to be paying attention to for the market to reveal its next piece of information to us. Now, if that hammer candle inside the ES Mini fails, I won't know where the bounce takes us to, so I really won't be able to draw in the A to B equals CD to the downside. What I mean by that is that bottom of the hammer candle could be the B point of an A to B equals CD to the downside. And that's only if it gets taken out, and I really can't draw that in ahead of time, so I won't waste your time. But you're going to be paying attention to that low as well as the high inside of the NQ, because they will provide us with some really important meanings out here. If I take a look at the daily equity futures contracts out here, we're going to see both this is the four-panel view. So in the upper left, you've got the ES Mini. Lower left, you've got the Dow. Upper right, you've got the NQ. And lower right, you've got the Russell 2000. So back to the first two on the shorter-term basis that we were taking a look at. Here's the daily chart. You take out that high, so you recycle that seventh wave move to the upside. That's the first thing you'd be looking for that sends a very powerful message. The second move you would be looking for is move above 49.0150. The actual high I would be looking for is 49.0150. Why? That is both the swing point from the trading session of October 10th as well as its TAS weekly profile high. You move above that, and then you're above resistance, so much above resistance that the NQ would be saying to you and I that what it wants to go target as a price projection level is 50.30, but I think more like 51.05 would be its price projection. So 49.0150 is also a number to be paying attention to inside of the NQ. It provides us with a lot of meaning out here. Inside the ES, we know why it is stalled up at this level, right? And we know that because just simply on a daily chart out here, you can see that descending price channel out here, as well as you can see the top of that TAS daily profile, which is 2146.75 out there. So it's gotten up into that area. We know it's pretty significant resistance. You close above 20, we'll call it 21, probably 48, 49. Price will move up to 21.58 and then maybe all the way back up to the top at around the 21.84 level. So we want to keep one eye fastened on each of those contracts to provide us with our piece of information. If we had a third eye, which we do, we would then go take a look at the VIX index and see what kind of information it is revealing to us. Now, on Friday, I believe it was Friday, could have been Thursday and Friday, we were taking a look at the current rising bottoms line inside of the VIX index, which on Friday was a close just slightly below that. Today you can see, and this is the lower panel, you're looking at the very bottom chart out here, and you can see that we're clearly trading below that rising little trend line inside the VIX index. Hey, if the VIX index had maintained that rising trend line, let's just say that's where it was at today and we had this move higher, Stevie would be saying to you, not so fast. But once you break a trend, that trend of rising bottoms is no longer our friend. That rising bottoms, while prices moving higher inside of the S&P 500, higher to sideways out there, sent a very important message. But now that message is now muted. It's gone. It's adios. And that says to you and I, as long as the VIX index trades below the price level of 1411, we are trading at 1313, so you got a long way to go right now. As long as you're below that 1411, I'd even hearken to say 1389. How do you like the use of that word, hearken? Well, I would say then we are more likely than not going to see a move down to 1216. And if we see a move down to 1216 inside of the VIX index, what is that going to do to the S&P 500? That's right, long and strong, actually just going to move higher to what levels we haven't identified, but probably back to its highs out there. So the VIX index providing us with a piece of information that says, there's plenty of liquidity out here, so be careful. Be careful. Really be careful always on both sides of the trade. The only way to do that is take a side and go ahead and set up stops on either side of this. So bulls are watching for that hammer low in the 30-minute to hold. Bears are looking for that to fail. Bears are also looking for the VIX index, and it's not likely to happen today, but it could happen today, really to get back above the 1411 area. That's a 50-day exponential moving average. So that pretty much sums up. Now, it can't sum it up because we haven't even gone to take a look at the summation index. Speaking of sums, how did you like that? Was that a smooth segue? How do I even use that word segue? I'm not talking about the segue that you stand on. But I'm talking about the segue leading into. Let's take a look at the summation index, which also is really just a summation of all of our advanced decline oscillator readings, which are the bottom panels of our chart here. Now, interestingly enough, as we speak right now, New York Stock Exchange back above the zero line. As long and strong, and what I mean by long, as strong as the NASDAQ composite is, you got to say, because its advanced decline oscillator reading is still below zero. When it's below zero, hard to believe that today, on a day like today, with a huge gap up, as it has shown, that is really still sellers that are in control. But there is no other way to read it, or no other way that I would want to read it, and that is that sellers are still in control of the NASDAQ composite. Now, if it gets back up to its highs of the day, 5308, no guarantee, but pretty good chance that if it get back up there, it'll have enough net advancing issues by the end of the day to move that oscillator reading above zero. In the case of the Dow, it too was just slightly below zero. So what's with the New York Stock Exchange? It's not joining in on the party out here. So we really have a toss-up because we have two charts, meaning the NASDAQ composite and Dow, that are absolutely saying not so fast. But the S&P 500, based upon the VIX index where it's trading, and the New York Stock Exchange, they're leaning towards a bullish bias, whereas the NASDAQ and the Dow are leaning towards a bearish bias. To me, that is 50-50, and 50-50 is a coin toss, and that's not going to really provide us with a lot of information. So we're going to say ixnay on the advanced decline readings out here because they are just not swaying us one way or the other. What else is it that could sway us in these markets? And I don't know. Maybe you've got an idea, or maybe you're thinking of something that's an idea that could sway us to one side or the other. And that's why I would like to hear from you at 877-927-6648. Why don't we go take a look at, I don't know what you want to take a look at. I don't see any email, steve@tfnn.com. I don't see any instant messages inside the Tiger's Den, and there are no callers on the line. So that says, I don't know, where do we go? What do we go look at? What do we go look at here? How about we just go look at some individual stocks? We'll do that for the next minute, and then you guys can fire up the phone lines or fire up the email lines or fire up some kind of line out here. Let's take a look at Amazon. I don't know. Why do we even take a look at Amazon? Why not? This thing near all-time highs out here, 834.41, not too far away, which is really the price point of about the 847.21 level from back on October the 6th. Volume today, about 2.4 million shares. It had about 2.6 million shares up at the highs. You know, as this thing has been moving lower, no real big volume moves to the downside. Just a little bit of churning and burning out here. Did provide us with, let me just hit the update switch, just make sure of this. Did provide us with a brand new TAS market profile today. It is already above the high of that level. We can forget about the prior profiles. Doesn't have a lot of meaning. So this is Amazon was like the Ohio State University. Folks, I fell asleep, and I still haven't seen the replays. How did Ohio State lose that game? I watched the ninth inning of the Chicago game. How could you not watch that game? And then fell asleep and forgot to turn the channel back, and woke up and found out that Ohio State had lost. Go Blue. Steve Rhodes with TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 70, S&P is up 9, NASDAQ Composite up 45. Let's continue taking a look at some of these individual stocks. I know that we've got stocks coming out with earnings here, such as Google, Amazon, obviously. I mean, they're all going to come out with earnings. Google right now is trading up nicely. Let's go take a look at it. All-time highs here, right? In the case of Google, what we identified out here, you can take a look at, so it's above it. This even formed a brand new market profile today. Market profile Moshile. I don't even know what I'm trying to say there, but you know what I mean. And what I mean is let's go ahead and get rid of the market profile since they're not impacting what Google is doing. And what we do know is it had been trading in this nice consolidation pattern, which it broke back a couple of days ago, 4 or 5 trading sessions ago. You break a consolidation. In essence, price came back and close enough tested that level back on Friday out here. You've moved higher today. Today's volume inside this is about 800,000, taking out the last time we had volume up here about 1.7 million. So a little bit light, but nonetheless, 909 looks to be the target. Hey, let's go to Chicagoland and let's speak with Robert. Robert, thanks for calling. Thanks for holding. How are you doing this morning? This afternoon?
I'm doing wonderful, Steve. Thanks very much for asking.
Hey, no problem. So what's the party situation like in Chi-Town?
Oh, it's huge. It's huge. It's wonderful. It's Cleveland and the Cubs. Yeah, it's a blast. It's just wonderful.
Yeah, now I heard that tickets are going for I don't know. I heard that the cheap tickets are over 4 figures or something like that.
Oh, really?
Yeah. But
I don't know. I won't even attempt the. When the White Sox won it in 2005, and I'm a White Sox fan, but I'm also I love the Cubs.
Yeah.
But it was I was able to get into games for free or something. I had something going, but the Cubs I wouldn't even attempt it. Oh man.
Yeah. Well, I tell you, it's actually probably like the first full game that I've watched this year, although I switch it back and forth between football and it. But, boy, they brought in a pitcher, so I don't know the names of the players, but they brought in a pitcher for the 8th, 9th inning there. The guy was throwing 103, 104 miles per hour. Jeez, talk about the amount of split milliseconds you've got to make a decision to go ahead and swing after that ball. Pretty amazing. Pretty amazing speed coming at you.
Absolutely.
Yeah. Okay, so you want to take a look at Procter & Gamble. I know we've looked at this before. So remind me what we're looking at and what you're looking at, how I can help.
I have to congratulate you. I called you, and last time we got cut off, and you said it was around 90. You said it topped out around 90.33, $90.22, and then you were looking for something to fall back to 85.23 or 86.56. It actually has gone down to around 84.08, and they report tomorrow. So my question is, what's your view now?
Breaking through 85.23 was definitely not a good situation for Procter & Gamble, only because it was a key level of support. Now, it's not like it broke it, with flying colors, so to speak, and just huge volume, but it did gap down. I don't know what October 19th was all about inside of Procter & Gamble, but it did, it's a pretty wide-ranging bar to the downside, and it had volume of nearly 13 million shares out there. That's what the daily. I think what you and I should do right now is just take a look at a longer-term chart here for Procter & Gamble. Let's just look at the monthly. And let me turn these profiles off because they're just simply impacting the view that we have. And I was just wanted to see if I could draw in any kind of channel lines or trend lines that made a lot of sense. And no, I don't see those. Let me switch over to another chart here. Let's see if we can identify any of its horizontal trading ranges. So let's put in PG and see what the monthly looks like here. I'm just looking for some other possible major levels of support. Okay, so inside Procter & Gamble, the level to be watching, they're releasing earnings tomorrow, did you say?
Yeah, tomorrow, probably in the morning.
So let's watch the level of about $83.26. At $83.26, that is its monthly horizontal trading range boundary line that it should be able to hold out here. And it's really the 82.21, which is a weekly level. So 82.21 to 83.26. If it breaks below that, closes below that, really, Robert, then what that says to me is that we'd have to reassess it, but it says you can go all the way back down into the August lows, back into 72, 64-ish type range out here. So it is coming up against a level of support. I wouldn't step in front of this thing right now, and the reason that I wouldn't is on the upside. Let's say this thing, bounces to the upside. What you now want Procter & Gamble to do is turn that price oscillator back up, and that would require a close right now today above 86.86. See, the biggest problem you've got on a daily chart here, Robert, is that this price oscillator, which is the bottom portion of my screen, has now turned down below zero, and that becomes a bit of a bearish message. So it's that combined with breaking through some other key levels of support that would have me saying it's not giving us a sign that your back is up against the wall and you could take a long trade going into earnings. Doesn't mean that it won't respond positively, but I don't have anything that I can visually see that would tell you that, hey, this is other than what you and I just looked at with regard to those profiles out there. But those are not strong enough to take a position to go long. And I know you're looking to buy this, right?
Well, I would, but you just brought up two numbers that I wasn't expecting. 83.26 is underneath that 83. I thought it was around 83.90. In other words, Steve, I'm going back probably 6 months. You said that you thought that if it got over 83.90, that it might go towards 96. So from what I'm hearing, when you bring up 82.21 and 83.26, both under that 83.90, PG's not going to 96.
Well, remember, what I was also taking a look at there with you were both weekly and monthly numbers. So getting down to those levels and holding a support would be a slightly bullish message out here. It's just the chart doesn't offer us a ton other than those levels that you and I have already discussed. There's a little bit of a small breakout where there's a little bit of a gap up back on June 29th out here. That low is 82.91. So these lower 80s really seem to be, the message right now. That's what the current technical indicators. I just don't have any pattern whatsoever inside of Procter & Gamble to the only pattern that I could give to you, and it's dangerous only because of the way everything is trading, is Tom DeMark has a system where he takes a look at consecutive closes, in this case here, lower than the candle 4 sessions ago. And when you get 9 in a row, 9 consecutive closes, lower than the session 4 trading sessions ago, and this is number 9 here on my screen, which showed up on the 21st out here, you got to a number 9. That is where price can stall. So just because price stalls today, which right now looks like it's a doji candle, to me, that is not a strong enough signal that it's found a bottom. This thing hasn't found its bottom way back here until it turns its oscillator back up. All right, my friend?
Very good, Steve. Thank you very much.
You betcha. Thanks for calling, and the best of luck to Chicago out there. Of course, if you're a Cleveland fan, I say best of luck to you as well. I'm looking for a good World Series, maybe even a Game 7. We haven't even gotten to Game 1, though. Steve Rhodes with TFNN. We'll be right back, folks.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Chapman is the guy's name. How could I forget that, right? He was throwing the Chapman wave. So he is the pitcher that I was referring to that was throwing the ball. I'm pretty sure I saw 103 on the clockometer. So now I believe that the fastest pitch ever thrown in a major league game was 105. And that was also thrown by this same lad. We got to call him a lad because he's a youngster out there. 100, can you believe that? 103, 105. So he's throwing them, toasting them out there at 100, 101. Folks, I don't know if you've ever tried to hit a fastball just coming at you at like 85 miles an hour, 90 miles an hour. It's amazing how quick you have to be at making a decision to go ahead and swing at those balls out there. So hopefully it's a good World Series. Never really understood how we let the baseball, the end of the season. Now we're talking Chicago and Cleveland, and it's going to be November, right? End of October, November. Games can go in November when these guys will be playing out there. Now, weathers look pretty decent out there, but, man, you get to some cold weather. Whew. Oh, my goodness. In any event, nothing colder than sitting there at a baseball game with the wind blowing through. Hey, let's go to Don in Northern Virginia, maybe? Don, thanks for calling. Thanks for holding. How are you?
Hey, good, Steve. Hey, I'm looking at AMD and GE for possible entries.
Okay. And Don, forgive me. You are typically looking at it from just a trade standpoint, longer period of time. What's the? Have you been watching these? Tell me a little bit more about what you're looking for here.
Yeah, these days it's just pretty much trading, Steve. With
okay,
you can imagine. Yeah.
Okay. Yeah. Okay. All right. So let's take a look at advanced micro devices. Have you traded this vehicle at all? This stock?
I don't think so. I've been trading for a long time. I don't remember, but I've always liked to look at it. I like tech.
Okay. So with regard to, there's a couple of patterns that could be setting up here as we look at advanced micro devices. Here's what we know so far. It made its high on August 19th, did that with 75 million shares. It has backed off since that high, made a low out here on September 13th, down at about $5. Advanced micro devices? Yeah, $5.66. Do I have the right stock for you?
Yeah.
Okay, great. All right. So I wanted to make sure. Now, it had a nice little counter trend rally out here. And in order for this to give you the actual bullish signal, one price you're going to want to watch is $7.12. If it can get above $7.12, do it more than 66 million shares, then this is going to go back and revisit its highs, and it would go ahead and give you an A to B equals CD to the upside. Now, the initial price projection on that A to B equals CD to the upside, Don, would give you really slightly right around its highs, really its all-time highs. That's what you'd be looking for. So therefore, I don't know if the risk reward is in it right now. The buy area on this, if this were to pull back on light volume for you, would be the price points of right around $6.38. You're trading at 689, 686 right now. Because the other thing that this could be doing is this could actually be forming an A to B equals CD to the downside. That would be more ideal for you to be able to get in on this from a trade standpoint, because this would actually set up a nice little Gertley buy. And those price projections, now what's going to have to occur in order for that to happen is you're going to need to see the price point of $6.24 get taken out. And at that stage, that would be the first level, and then 566 would be the second level. And at 566, it's going to be, or 560 is going to be some pretty strong support out here. But you'll want to watch the volume if, in fact, that's what it turns out to be. And you're going to want to see more than 51 million shares as it's approaching that 560 area. Then that would give you a more ideal type of buy pattern out here. But right now, price just trades is in between its market profiles, and at least its daily market profiles, and it's not providing you and I with any good indication, any clear indication, I should say, with regard to which way that this would trade. So does that assist you at least with regard to AMD? Or ask me another question that maybe, I posed for you in saying that.
Well, Steve, so should I go in at 628 or 712? Wait till it shows.
Well, I guess what I wanted to tell you is, so right now, let's summarize this. Right now, this is trading in between its TAS market profiles, its daily market profiles, and it says the range is 638 to 706. Until it breaks either side of that, I don't really know which way this wants to go. If you were to pin me down, I would say this wants to move lower. And the reason is because it just looks like it's forming an A to B equals CD to the downside. That's what I would, that's the initial indication. But that's going to take a while to unfold if, in fact, that's the pattern, because that price point is going to be the lower one that I gave to you, which says right now that price point would be about 475 to 411. Okay? That would set up a Gertley buy pattern out here. If you're really itching at the switch out here, then your buy on this equity would be 638. Right around 638, and you need to see it pull back into that 638 price point and do it with less than 30 million shares. That's the only way that I could say, okay, this is your potential for this to move to the upside. And then you'll just have to pay attention to what happens at the price level of 706. Right now, it's just inside a trading range. There's nothing for me that suggests that it's going to break one way or the other. Is that a little more clear for you? Or,
yeah.
Great. Okay.
And, do you recommend doing stop limits, so maybe I can, put a stop limit?
Yeah, absolutely. Yeah, I think whenever you trade, you should use both sides of the trade. You should get familiar with, if you're not, OCO orders. One cancels the other. That's what that's going to do. See, you're most objective before you've entered the trade out there, and then that allows you to do the proper risk reward analysis. And so I would have both sides of the trade figured out. Where am I going to get stopped out if the trade goes against me, and where am I going to take my profits if the trade goes in the direction that I want? You can always adjust those. You can always get back in, but I really do recommend that you do that. On the stop size, Don, it's really all about position sizing. What I like to do is I like to identify where I'm going to take a trade, go long or short, and then take the average true range of the last 10 days. So take from low to high of the last 10 days. Figure out what that average is, multiply that figure by like 1.272 or 1.618. Those are Fibonacci expansion numbers. That becomes my stop. and then all I'm taking is the percentage of capital that I want to risk on a trade. Let's say it's 1%. Let's say that is $1,000 that you're willing to risk. Take that $1,000, divide it by your stop. That tells you exactly how many shares you would buy. So position sizing is really what it's all about, and not risking more than 1% of your working capital. If it's $100, it's 100. If it's 150, it's 150. Whatever your working capital size is, and what position sizing is doing, and using a larger stop, all it's doing is it's changing the number of shares that you purchase. And in an environment like this, if you use too tight, I don't want you to use too tight of a stop. And too tight of a stop would be just simply the trading range of the last 10 days, because you could be right on the trade, wrong on the stop, your money's gone, you haven't really given it a chance to work. Okay?
Okay.
Now, you also want to look at GE, I think. So you're welcome to stay on through that break if you'd like.
Sure.
Okay. So let's go back out to Don in Virginia. We're going to take a look at GE, which today is right now trading about $28.96. Steve Rhodes with TFNN. Be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016, and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. We're on the line with Don. We're taking a look at General Electric. So General Electric, Don, kind of an interesting stock chart pattern. We're going to take a look at the daily first. And one thing that we can say about the daily, first, this thing has been moving lower for quite some time, ever since about the middle of July out there, as when the market normally forms its top, right around July the 20th. The market typically forms a bottom right around October 13th, just from a seasonal cycle perspective. And this one's been almost on time in that perhaps the low on Friday may have been the bottom out here. Price has been moving lower with less relative energy, and that's one of the types of patterns, Don, that you and I like to look at for either price for either a stock making a high or a low. In this case here, it would be the low. Unfortunately, and do you know what occurred on Friday? What was it that initially drove GE lower and then had a nice bounce the rest of the day? Do you recall what piece of news? Was it earnings or something, or?
No, I don't. I don't think it was earnings.
No, okay. So certainly this thing had gapped down. It was a pretty good-sized gap to the downside on Friday, and then it continued to trade up. But just because it's a green candle doesn't mean that it's a bullish reversal signal or anything. It just means where price opened and where price closed. So we still don't have a bullish reversal signal to confirm that pattern. Maybe we get that over the next couple of days. And then if we did, and as long price stays above the 28, we'll call it about the 28.80 level out here, that might be, because you said you were looking for a trade, that might be your signal for the trade out here. But I sure would like to see some type of bullish reversal candle just to go ahead and give us a confirmation that that's a tradable pattern. And we just don't have that just yet. So we might be in the range for where this thing could be bottoming. As we take a look at the daily chart. If I look at the weekly time frame chart out here, let me put this up. Any questions about the daily chart or anything that you might be looking at that I may have overlooked just because it was a quick scan?
No, I just like you say, it's been falling since July, and it's a good stock, good company. I mean, and I think it's just like it might be due for a bounce.
Yeah, the other thing that it's doing, so even though it's been falling, just like you pointed out, one of the things that it has been doing here, let's take a look at last week's falling price, so to speak, and look at the volume characteristic. So last week was 189 million shares, and it's moving into a swing point from the week of February 8th. When the market made a nice bottom out here, which had 255 million shares. So that alone is a good sign of a potential bottom. It was a rejection of that swing point, meaning it tested the high, closed back above it, the high being 28.70. So it's another good indication of a potential trade, as you said you were looking for. Now, that trade, with regard to where would that take us up to, at this stage here, let's put the weekly profiles. This could get as high, could get higher, but the first target would be around $30.44. So that's what you would use as your, exit target on any kind of trade. You'd figure out your stop. That would be your target exit. I'm not saying to fire away just yet. I would like to see some type of bullish reversal signal, and we just don't have it. I would also just investigate what was Friday's session all about, just to try to, because it was good volume. It was moving, in essence, lower with a pretty good volume, even though and again, because it's a green candle, it's not a bullish reversal signal. It certainly was pushing lower. It certainly had volume, and that is a reason to be cautious out here. That's why I would wait for some type of bullish reversal signal. All right, my friend?
All right, thanks. I don't want to be greedy. Could I ask for one more?
You could if we had more time. But tell me what it is, and I'll do it for you tomorrow. What's the I'll do it tomorrow.
AT&T.
AT&T, absolutely. Okay. Thanks so much for calling in, Don. Have a great day. We'll take a look at AT&T tomorrow. Folks, stay tuned. Our man, Mr. David White, our favorite polar bear, he's up next. Have a magnificent Monday. We'll see you on terrific Tuesday. Take care.
Larry Pesavento has just announced a special offer for subscribers to his trading service, Fibonacci 24/7. Right now, you can get a month of Larry's Fibonacci 24/7 while gaining access to his upcoming live webinar, The Pattern That H.M. Gartley Missed, taking place Wednesday, October 26th. This live workshop will be archived for subscribers if you cannot attend live. And if you order right now, we'll also send you a copy of Larry's book, A Trader's Guide to Financial Astrology. This book retails for $90, but we'll send it to you as part of this special offer that runs through the night of the workshop, Wednesday, October 26th. Sign up now and get a free copy of Larry's book, a month of his Fibonacci 24/7 trading service, and a live workshop on the pattern that H.M. Gartley missed. With a 30-day money-back guarantee, this is an offer that you can't let pass you by. Sign up today for Fibonacci 24/7 by visiting the front page of TFNN.com.
You're watching Tiger TV.